Every single trader looks for that exact point where a violently falling market finally hits the bottom and turns around. But trying to predict these shifts too early usually ends in disaster. Traders even have a name for it: catching a falling knife. You think you're buying the dip, but you just get cut. Centuries ago, Japanese rice traders figured out a way to visualize this exact market momentum. They developed candlestick patterns to map the tug-of-war between buyers and sellers. Among all the patterns they identified, one stands out as incredibly rare, poetically named, and highly effective. It's called the abandoned baby. Recognizing this anomaly offers a visual framework to identify trend exhaustion by looking for specific gaps in price action. The name abandoned baby sounds dramatic, but it describes exactly what you see on the chart: a tiny, isolated candlestick that looks like it has been completely separated or abandoned by the rest of the price action. Look at this strong market downtrend built by heavy red candles. Sellers are in control. Then the price violently gaps downward, bypassing the previous low, leaving massive empty space. Right at the bottom of that gap, a tiny cross-shaped candle forms. This doji represents total market indecision, perfectly isolated. Don't worry about whether this doji is red, green, or black. The color is totally irrelevant. What matters is its tiny size and that it is completely cut off from the candles around it. The confirmation happens on the very next candle. The price violently gaps back upward, followed by a strong, solid green buying candle. The doji is now completely stranded in a V-shaped formation. This exact chronological sequence is visual proof of a power transfer. Sellers completely exhausted their downward momentum, allowing buyers to aggressively seize control and drive the new trend upwards. We can also look at the exact inverse, the bearish abandoned baby. It occurs at the top of an uptrend. You have a gap up to a doji, followed by a gap down to a red candle, signaling an imminent price collapse. Traders often confuse this setup with much more common formations, like the evening star. Comparing them side by side, the only difference is the empty space. On the right, the abandoned baby has clear, extreme empty gaps on both sides of the doji. Look at the evening star on the left. The long, thin lines extending from the top and bottom of the candle bodies are called wicks. If those wicks touch or overlap even slightly, you are looking at a standard star pattern, not an abandoned baby. The larger that empty void of the gap, the stronger the signal. That literal empty space on the chart represents a drastic, aggressive psychological shift in market panic or greed. Just identifying the pattern on a chart won't make you profitable. Without a strict execution strategy to protect your capital, it's just an interesting picture. Patience is key. Never enter a trade while the middle doji is still forming. Wait until the third green candle closes past the gap to confirm the reversal. You only execute the buy when the live price crosses above that third candle's closing price. This pattern provides a specific, rule-based method for setting a stop-loss. If the trade turns against you, place your stop-loss order at the absolute lowest tip of the isolated doji's wick. If the price drops below that, the setup is invalid. Get out immediately. By patiently waiting for those gaps to form and verifying the isolated baby and setting a strict mathematical stop-loss, you take sudden, terrifying market volatility and turn it into a highly calculated, low-risk opportunity.